Today we likely to discuss about what is debit and credit and golden rules of accounting and as well as journal entries format. So first of all, you know what is debit? Debit means if you debited, so you take an example of a bank. If you withdraw your cash, should be debited in your account. If you deposit in your bank, it was credited in your account. So first of all, you check the accounting format. What are the rules of accounts? First one, personal account, debit the receiver, credit the giver. So that means so whatever we are receiving, that should be debited. Whatever you are giving something, this should be credited. So cash deposited into bank, take an example. So you are depositing cash, so but you are giving cash, that's why it was credited in your account. But you are depositing cash in which place? Bank is the receiver, that's why bank should be debited. You understand the two aspects. Bank is a receiver, that's why in bank column it was debited, and in your place it was credit the giver. So take an example of what are the individual accounts in personal account is nothing but individual account like Ram, Gopal and SBI, etc. And coming to the second account, real account. What is real account? So real account is purely related to asset classification point of view. So the real account rule was debit what comes in, credit what goes out. So for example, if you purchased a machinery or purchased a mobile, so mobile was coming, cash was going out. Okay, so the asset was coming here, and the current liability, that means whatever the cash is going out. So both are related to real account. Taking example of what are the assets and liabilities. You know, assets means like current asset is cash, debtors and bank. These are all current assets, and machinery is a fixed asset, and capital is a fixed liability, and creditor is a current liability, and closing stock is a current asset. So likewise all assets and all liabilities are coming here. And coming to the next one, what is a nominal account? Nominal account rule is debit all expenses and losses, credit all incomes and gains. So in this particular nominal account, whatever the payments, whatever the expenditures, whatever the receivables, whatever the revenue comings or losses occurring, all the transactions are coming in nominal account place. So by clear understanding about these particular transactions, so if take an example of stock, that means taking of opening stock or taking of availability of stock in particular outlet. So stock is increases, so the account should be debited. Stock is decreases, the account should be credited. That means when stock is increases, that indicates your sales are not completed. Okay, your sales are not completed, so the stock is available, so that's why it is a certain loss to the company, and it was moving to the next years like closing stock, and after that again it was coming to the opening stock. So this is unnecessary expenditure, warehouse expenditure, that's why we call it as it is a debit side. Stock increases, it was debit. And stock decreases, that means you are selling more and more goods, that means it was credited and you are getting more money. And taking the next one, asset increase. Asset increase means debit side. Why? Because of debit what comes in, credit what goes out according to the rules of a real account. Okay, asset increases, so automatically you are purchasing so many goods. And next one, asset decreases, that means it was credited. So because if you decrease your asset, so automatically the account should be credited. So next one, liabilities. When liabilities are increases, what happen? It should be credited. When liabilities are decreases, it should be debited. Same like asset point of view. And expenses are increases, it should be debited. And expenses are decreases, it should be credited. And coming to the income, income increases, it should be credit, and decrease, it should be debit. And coming to the accounting equation, most of the people are taking the balance sheet equation is the right one. Accounting equation is also right. So but you know what is debit equal to credit? Why? Because of dual aspect concept or double entry system of accounting. So that means every receiver is a giver and every giver is a receiver. Normally every debit must be a corresponding credit and vice versa. So we write above in the following form. So that is expenses plus losses plus assets. So you take example of expenses in nominal account, losses in nominal account, assets in real account, that equal to revenue plus gains plus liabilities. So if expenses and losses and incomes, and at the same time we take the gains are set off, the equation takes the following form like assets equal to liabilities or asset equal to equity plus external liabilities and capital form. So though that is the accounting equation, I think so you understand. And let we go to the clarity about how to write the journal entries. Now we go to the journal entries. Yeah, please go check the journal entries. Write journal entries for the following transactions. Write journal entries for the following transactions. So taking example of 2018 Jan 1st, purchased goods from Ram 10,000, and second commenced business with cash 50,000, purchased machinery 10,000, sold goods to Ravi 20,000, cash deposit into bank 10,000, cash withdraw from bank for office use 5,000, salaries paid 10,000, commission received 500. And so these are the events as well as transactions, and you, with the help of these particular events plus transaction, you should write the entry. So that is nothing but a journal entry. So let me check one by one. Jan 1st 2018 purchased goods from Ram 10,000. What we purchase here? You are purchasing some goods. So entry is, so what you are getting here, మీకు ఏం వస్తుందండి, purchases we are receiving. So purchases account debit to Ravi account. So who is the giver here? So here Ram. So just I am writing the Ravi, but you just may mention the Ram name. So Ram account, purchase account debit to Ram account. So how much amount? 10,000 posted in debit side as well as credit side also. And um, don't forget about to write the narration. You should just write the narration also, being goods purchased from Ravi. And this is the column date, particulars, LF, ledger folio, because we are sending this data to next level, the classifying level, that is ledger. And next column debit and credit. And the same way next second, commence business with cash at 50,000. So the entry is cash account to debit to capital account. Why? You are receiving cash and you are giving capital. Okay. So being business started with cash 50,000 from debit side as well as credit side. And next, third 3rd January 2018 purchased machinery 10,000. So what we purchase here? Machinery. What we are getting here? Machinery. And what is going out? Cash. So machinery is coming, cash is going. Debit what comes in, credit what goes out. So machinery account debtor to cash account. And 4th January 2018 sold goods to Ravi. So Ravi was the receiver and we are selling some goods. That's why Ravi account debit to sales account, because debit the receiver and credit all incomes and gains. So sorry, debit all expenses and losses and credit all incomes and gains in the nominal account point of view. So sale is the nominal account point and you write the narration being goods sold to Ravi. So the amount column should be 20,000 in debit and credit side also 20. And the same wise, just we discussed in the few minutes back, what is cash deposit into bank. So bank is a receiver, that's why we posted in bank account is debit side. And who is giving? So we are giving cash. So what we are giving? Cash. So that's why bank account debit to cash account, and the amount is be 10,000 from debit and 10,000 from credit side. And next, if you withdraw from bank for office use, so the entry from 6th January, that is cash account debit to bank account, because we are receiving cash. And who is giving cash here? Bank is giving cash. That's why debit the receiver and credit the giver. Okay. And you write being cash withdrawn from bank 5,000 from debit and 5,000 from credit. And the same way as the next entry is salaries paid. So what we are paying here? Salaries. So salaries in the form of cash. So we are receiving salary, and what the company is giving? Cash is company is giving to us. So salary is coming to us, salary account debit to cash account. The amount is 10,000 from debit and 10,000 from credit. And the same wise, commission received. So commission received means what we are receiving here? Cash is receiving. What company is losing? Commission. So company is giving a cash format. So cash account debited to commission account, being commission paid from 8th January 2018, 500 and 500. In this way, you can learn journal entries very simply, and with the help of the past discussion. And with the help of past discussion, what is debit the receiver, credit the giver, what is debit, what comes in, credit what goes out, debit all expense and loss, credit all incomes and gains, and the stock increase or decrease. And you just go through the observe this format, and with the help you can understand how to write debit and credit side through properly. So thank you.